the energy sector can't trade this low for much longer.
This is one of the lowest value sectors in the whole market.
This company is quietly beating the consensus by nearly 100%.
But these three energy companies are still seeing strong performance and high expectations.
$21 a share, which by the way is 145% upside.
MarketBeat's Gabriel Osorio-Mazilli shares a list of three energy stocks, all priced well under $20 right now.
Potential undervaluation and cheapness, the good kind of cheapness.
Could these names bring the value you're looking for this fall? Gabriel, so great to have you back on the show, talking about an area of the stock market where we can still find some value right now.
Absolutely. That area is the energy sector of the United States. When you look at valuation multiples compared to the rest of the S&P 500, this is actually the cheapest one out there. And we could see some action being taken around this fact, such as Warren Buffett buying Oxychem off of Occidental Petroleum. We know that Buffett doesn't do anything unless he can buy a business way below its intrinsic value. So I think that that could be taken as a sign for potential undervaluation and cheapness, the good kind of cheapness in the energy sector.
Now, let's talk about some of those valuations a little bit and how the energy sector compares to the rest of the S&P. Let's talk specifics a little bit, just how undervalued are energy stocks right now compared to the rest of the S&P 500.
Well, energy trades at around half of the S&P 500's price to earnings ratio, which is around 13 to 15 times today. It's actually the lowest valued sector in the market right now. And I think it's because oil prices are so low due to the fact that markets haven't really priced in the effects of federal rate cuts. Once those are in, cyclically, oil stocks are so low right now that any whiff of demand could send oil prices higher and the entire sector into a major rebound.
Yeah, if you're looking for value in the market, this is definitely a lower area of the stock market to look into right now. And we've talked about nuclear stocks several times over the last few weeks as a lot of these stocks are starting to gain traction. The list we have for you today are three energy stocks not in the nuclear field that have a lot of room yet to run, and they're all under $20 right now. If you are more interested in some of those nuclear names, make sure to check out our free premium report on marketbeat.com. It's a list of the 7 top nuclear stocks to buy now in 2025. A lot of these names are getting a lot of traction right now. They're ones you don't want to miss. So scan the QR code now or click the link right in the description of this video to get that free report on marketbeat.com. All right, Gabriel, let's get to the first energy stock that you have on your list of stocks under $20 that have a lot of room to run yet.
Well, that would be Fluence Energy. And this one is an underrated name, as you mentioned, under $20, not really in the news out there, at least yet, right? But I think there's some developments in the company that could throw it into the front and center of financial media spaces and maybe even mainstream media. And the reason is that this company is not only a hardware company providing energy storage and management solutions, but it also has a software as a service aspect to it. And as we all know, technology stocks are the hottest thing out there. Everybody wants a piece of that area. So multiples, as far as valuation goes, for Fluence Energy could rise as far as this preference goes for technology. And this one is US domestically focused. This is exactly what you see cities like Dallas, Chicago, Phoenix, Atlanta, and several others operate over 80% of their electricity capacity. And what this means for everybody is that you're going to see higher electricity bills on a monthly basis. Now, there's two ways to fix this. The long-term fix is to switch energy sources from what we have today to nuclear. That might take a while. And the short-term fix is to develop more technology or implement more technology when it comes to storage and management. And this is exactly where Fluence Energy comes into play and why I think it's going to be a cheap stock but not for long. So better pay attention to it.
Yeah, this one has a couple of interesting stories in the chart and some of the data to look at. It's seen a really big run up in just the last month, but it's not quite to the top end of its range yet. Talk about what's kind of spurring on this run up and how much further it could go.
Well, I think the new real estate when it comes to artificial intelligence is energy, right? Everybody has caught onto the fact that data centers and semiconductors and chips and cloud computing and all those fancy names, right? Everyone's on it. Everyone's already bought, while energy itself is not there yet, as we already know. So Fluence Energy might be at the top of the list for that rotation into the next phase or next domino to fall in this AI race. So as far as Fluence Energy goes, as you mentioned, it already had a decent rally over the past quarter, but it still trades well below 80% of 52-week highs, which is officially a bear market territory, right? So if you could catch this stock on the cheaper end before the market prices in some of the developments that are already happening in the company, I think it'll be a happy camper down the line.
One thing to note with this one is analysts haven't caught up to the stock yet. Even the recent upgrades on this one are nowhere near where the stock is trading today, and definitely nowhere near where that 52-week high is for this stock. Why do you think analysts aren't favoring this one?
The short answer would be they're just like you and me. They have jobs and careers to protect. So they're not always going to risk their reputations by telling you the entire picture in case they get it wrong. So in the case of Fluence, the recent upgrade by Goldman Sachs analyst is well below the $24 per share 52-week high for Fluence stock, which I think if we keep seeing those rallies, these analysts, not only from Goldman, but other investment banks and ratings houses, will eventually catch on to the fact that this could be a safer stock down the line and feel more confident about boosting the ratings and price targets as well. But essentially, it comes to being risk averse, right? Not getting the stock wrong or getting the idea wrong, which might hurt their reputations and careers down the line.
That's an interesting company, one we have not talked about on the channel before. So excited to bring that into the energy discussion. Let me know in the comments what you think about this one. Does the analyst rating scare you a little bit? Are you excited about the future potential run up of this company, too? I want to hear your thoughts on Fluence Energy in the comments. All right, Gabriel, let's get to the second stock you have on your list for us today.
This is another undervalued name trading well off the 52-week highs. It's in fact around half of it. This one is Crescent Energy. This is a more domestic play when it comes to natural gas, and it falls into the same theme that I mentioned for Fluence Energy. And the same factor that nuclear is going to be the long-term fix, but coal, fossil fuels, and everything that we use today may be amplified or improved by storage and management of energy. But this is where Crescent comes into play as a natural gas company because natural gas is right there as far as where the supply is today, what type of energy we use today, and how we produce electricity right now. So even though nuclear is expanding, even though nuclear is being adopted, and the current administration is looking to expand those infrastructure projects to shift energy sources, we're not there yet. I mean, this is a multi-year plan, right? So if you're looking for profits on a short-term basis, or at least not on a multi-year horizon, Crescent Energy could be one of those plays as we still rely heavily on natural gas right now.
Yeah, there's still a lot of use of natural gas, although I think the natural gas stocks in the market are down a little bit right now. Curious to see if there's any kind of catalyst that could bring these stocks back up. It certainly seems like analysts, when you look at what they're saying about this stock, think that there is room to run yet for a natural gas company like this one.
So as of right now, Wall Street analysts see the consensus price target for Crescent Energy at around $15.67, which would be around 83% upside from where it trades today. So that could be a confirmation that this stock, which again is at half of 52-week highs, could be an undervalued play to consider in the energy rebound. Now, this consensus is not the only factor out there calling for optimism, as analysts from Raymond James Financial see the stock price going all the way up to $17 a share, which is still shy of the highest rating out there for $21 a share, which, by the way, is 145% upside. So if you want a multi-bagger stock in a company that is already established, in a commodity that, as you mentioned, is cheap due to the underpricing of the scenarios that could come down in the economy, Crescent Point Energy is a perfect stock to consider in your portfolio.
Yeah, this is a really interesting company. I'm curious before we move on to the next name, let's look into the financials of this company a little bit. Have they been getting the earnings that they need to give that consumer confidence? And it certainly has some analyst confidence out there. What could be behind that?
Absolutely. So even though the energy sector is still falling behind on EPS growth, this company is quietly beating the consensus by nearly 100%. Well, the market beat consensus was for 23 cents in EPS last quarter. The company actually reported 43 cents in earnings. Now, this could be a sign that most of the consensus and most of the view from Wall Street and the market is on the more conservative side of things. Now, keep in mind that when these interest rate cuts start to trickle down into the overall economy and have the effect of growth and more demand for commodities like oil and natural gas, that outperformance in earnings is definitely not going to be a fluke. I think it's going to be something to be expected for the coming quarters.
Let's talk about the last name. I'm really interested in this one because right now the price point is really low.
Yes, just like the other ones on this list, this one is below $20 and trading at around half of its 52-week highs. That spells out undervaluation no matter which way you look at it on the price side. But now we have to look at the fundamentals and see if we can justify even looking at a stock that has been beaten down so much. Now, Cosan stock is one that is exposed to the Brazilian natural gas industry. Now, we're talking about the US data center expansion and the issues that higher electricity costs bring. But this is something that's happening worldwide. We see countries like Poland, Germany, and other European regions starting to see the increase of electricity costs due to data centers. And the same thing is happening in Latin America, specifically Brazil, the biggest economy in the region. So as far as electricity costs goes, those are also going up in Brazil. The share of demand from data centers is also going up in the region. So that demand for the immediate supply of energy, which is natural gas, is going to have the same effect that we just talked about for Crescent Energy, only this time in Cosan exposed to the Brazilian economy.
A similar market, similar field here, but a new name again, one we've not really talked about on the channel before. So it's interesting to look at. This one, unlike the last name we just talked about, is seeing a lot of red in the chart. I think pulling this chart up, it looks a little bit harder to get into, like you said, of is it worth looking at because it's had such a beaten up year. I think especially concerning is that just a month ago it had a little bit of a run up and then is pulling right back. So where does the support for this stock actually lie right now?
This company, being in Brazil, is exposed to the US dollar volatility, right? And whenever we see big Forex movements, that might have caused the swing that you mentioned and then the immediate pullback right after, as revenue projections and assumptions change all the time as the Forex market moves again. Now, this stock has a price target of $9.47, which is around 121% upside from the discounted price it trades under today. Keep in mind, this is not only a natural gas play for Brazil's energy, it's also in the agribusiness. And Brazil is one of the largest exporters of cattle and other proteins as well. So, as demand for food and services goes up in Brazil, given the population growth or merely the data center expansion, I think natural gas in this energy stock is going to be in high demand, driving that price target into reality.
I think it's important to talk about that price target, though. It looks like one of the highest price targets that's leading this consensus higher was almost a year ago, December of 2024. Citigroup had that really high price target of $19. But recently, we haven't seen the same kind of action. There's not a lot of analyst coverage of this one either. So that's part of the story. There's just not a lot out there. But any thoughts on how that higher end of the price target is now almost a year old?
Right. This is not an uncommon occurrence for stocks that are overseas and that are as small as Cosan is. This $1.9 billion company doesn't really fall into the radar of big investment bank analysts, right? So you might see some ratings coming from boutique shops or anywhere else in the financial media, but it's not going to get as much attention as the big banks or the big funds when they initiate coverage on a stock. So it's not necessarily bad news, but it's not good news either. You have to think independently as an investor when it comes to smaller stocks like this, especially overseas ones. And I want to go back to the size aspect of it, right? We have a $1.9 billion company, which is one of the leading ones as far as providing natural gas in Brazil's economy. Again, the largest in the Latin American region. And I don't think that there could be any more big downside when it comes to compressing the market cap of this company. If anything, the risk to reward ratio is fantastic right here because it's much easier for it to go from 1.9 to maybe a $5 billion valuation than it is to go from 1.9 down to 1 billion, right? Like the economy would have to collapse, energy would have to come into a dark period essentially for Brazil in order for this to happen. And with data centers expanding and with the population growing in Brazil, I don't think that's going to be in the cards for Cosan stock.
All right, very good. Well, let's finish out this conversation today with quick advice for investors out there when they're looking at these value plays, maybe undervalued stocks that are lower than they've been at other points this year. What are some things to consider if you're going to be doing these kinds of investing?
Well, go small, go responsibly. Don't put a lot of your portfolio into these names simply because they're more volatile than the rest. And you don't really need to hit a home run in this case. As long as the energy sector rebounds, which cyclically it has to, right? The energy sector can't trade this low for much longer. Now, in this case, you have to be patient, you have to stomach the volatility, and being responsible with your sizing helps you achieve this through. Because if you go too big and you only think of the upside and you say, well, if I put 10% of my account into this trade, I'm going to make 10 to 20% overall. But then what if you get this idea wrong, right? So you have to be responsible in risk management, sizing your positions, and make sure that the tide is with you. Right now, as you mentioned, price action is not really helping the case here. Other than Fluence, right? When we have the positive price action, and then we have some analyst recommendations or reactions to it. You're not going to see anything positive. You're not going to see much coverage until the price action is there. Be patient, think about the long term. And right now, you'd be exposed to the tailwinds of expanding data center footprints around the world and the solutions as far as energy when it comes to that space.
A really good point. There's so much demand here. It's interesting to see this sector kind of lagging a little bit at the end of 2025. Great discussion today, Gabriel. Thank you so much for your time. And thank you for watching, everyone. Let us know what you think about these three kind of little known names in the energy sector. Do any of them pique your interest? Are some of them a little bit of more of a red flag to you? We'd love to hear your thoughts in the comments. Thanks for joining us, everyone. And as always, happy investing.